All right, guys, welcome to the Investors Den. My name is T or Tame or whatever it is that you choose to call me. Today, I'm going to be introducing you to the world of trading. I'm talking about trading cryptocurrencies, right? But before I get into it, I really want to thank you guys for subscribing. And if you've not subscribed yet, you can click on the subscribe button down below. And also make sure you turn on that notification bell so that you get notified whenever I post a video. Also, make sure to smash up that like button so we can get more people to get here and give more value to more people. You know, the more the better. All right, so real quick, let me get into it. So what is trading? Trading is basically the act of buying and selling, exchanging one thing to get another. And in this case, what we are trading is cryptocurrencies. For instance, you're buying Bitcoin with Naira. So you're exchanging your Naira to receive Bitcoin. That is basically what trading is about. Sounds easy, right? But the trick is how to do this and make money from it, because that is what everybody is after these days. That is what everybody's after, actually. Everybody wants to make money. I mean, I want to make money. You want to make money. That's why you're here, you know. All right. So for you to trade profitably, you need to do something called analysis. So this analysis is you predicting the market movements, you know, looking at the charts, looking at what's going on with the assets that you're interested in and saying if it's a good time to buy or not. That is basically what analysis is all about. So there are two um, types of analysis. There is the fundamental analysis, and then there is the technical analysis. Fundamental analysis is all about what's going on with the assets, you know, the news, the article, what people are doing, what the company involved in that asset is doing, you know, what is going on with the assets basically. And when you do your analysis and proper research, you can then reach a conclusion and be like, okay, this might be a good time to buy. Or you might reach a conclusion and be like, I don't think this is a good time to buy. And as a matter of fact, I even want to sell. So that is basically what fundamental analysis is all about. Now, the second aspect, technical analysis, this is where most people get confused. Technical analysis involves you looking at the charts, all right? Where you see those lines, candlesticks, and all of that stuff. And most times people get overwhelmed when you look at those things. They don't really understand what's going on. Well, basically, all those charts and all those things are just buying and selling. That's what it is. It's just representing it on the chart. So basically, those lines, those bars, and all those things, they all indicate the psychology of the market, what most people are doing, what most people are doing in the markets. Most people buying and most people selling. So basically, when the bars are green, when you have continuous green candlesticks, this means that most people are buying, basically. And when you have red candlesticks, you know, dropping, descending to the downside, this means most people are selling. So there are two ways to trade, all right? As you might have already established from what I've said, you can either choose to buy or sell the market. If you're buying the market, let's say you're buying Bitcoin, for instance, it means you're buying, hoping that the price of Bitcoin is going to go higher. Let's say you bought Bitcoin at the price of, say, $30,000. You're hoping that by tomorrow, when you sleep and wake up, that the price of Bitcoin will probably be at 31 at least, so you can make a little profit. All right. That's you buying, that's you being positive about the market. But if you're negative about the market, that means you're predicting that the price of Bitcoin or whatever assets that you're selling, that you're trading, that means you're predicting that that asset is going to fall. You're basically negative about it. So what this means is if you choose to start selling that asset at the price of $30,000, that means by tomorrow when you wake up, you want to see that assets probably at 29, 28, or even zero. The lower, the better for you if you're selling the asset. Real quick, let me just jump right to the chart. Technical analysis is what I'm going to be showing you how to do today. There's a whole lot involved in technical analysis. I mean, it's a full course, but I'm going to just introduce you to it. So when I'm doing analysis, you can have a bit of idea, or when anyone is doing analysis, you can have a bit of idea of what that person is talking about. So let me quickly go to, let me share my screen and go to the chart so you can see exactly what I'm talking about. Okay, this is a website called TradingView. Trading view, as the name implies, it gives you a view of trades. On a more serious note, trading view shows you on a chart what's going on in the market, right? So, like I talked about, as you can see, there are two colors on this screen here. There are green bars, and then there are red bars. So these green bars, they represent buying. That's why whenever you see green bars, it keeps going up. But when you start seeing red bars or red candlesticks, we don't refer to them as bars actually. They're called candlesticks, okay? Because they look like candles. Okay? You can see this. They look like candles actually when you look at them. Look, this is the body of the candle, and then this is the wick. So that's that. So let me just give you some sort of real life scenario, right? So let's say you decided that you wanted to trade, and let's play this back all the way to this point here. So let's say you looked at this chart, right? And you're like, this market is falling. So I want to sell this market. And then you're predicting that, okay, the market is going to fall all the way down to this point here, right? And then you start selling the market. So let's see what happens when you choose to sell at this point. If you don't do your analysis correctly, you're going to miss out. So remember that you decided to sell at this point. So can you imagine? Let's say that you you started selling from here, right? See, the market went up all the way to about 36%. So you definitely would have lost 36% of your capital. That's how it works. But if you did this correctly, and let's say you decided to buy at this point, you would have made an extra 36% on your investment. So that's the way it actually works. Okay, so that's what that is all about. So in my next video, I'm going to be showing you how to analyze and how to make sure that you can take advantage of this market, because to be very honest, it's kind of hard to predict. If you don't do it correctly, you lose a lot of money, as I've shown you, and it happens very fast. You'll be surprised how it happens, how fast it can happen. So you need to know how to do this properly and apply necessary risk management so that you can make money, and most importantly, not lose your money. All right. So thank you for watching. Make sure you subscribe and turn on the notification bell so you don't miss out on that video. Make sure you like and share with somebody that you think might be interested in something like this. All right. So thank you guys, and bye for now.